This episode is brought to you by Sorare. Stay tuned for more information on them later in the episode. What's up, everybody? I'm Scott Melker, and this is the Wolf of Wall Street's podcast, where 2 times a week I talk to your favorite personalities from the worlds of Bitcoin, finance, art, sports, politics, basically anyone with a good story to tell. Now, if there's one thing we love on the Wolf of Wall Street's podcast, it's a guest with a bullish prediction for Bitcoin. And Dan has recently said that Bitcoin is likely headed to 500K. Dan Tapiero is the CEO and founder of 10T Holdings, a private equity fund that focuses on investing in the digital asset ecosystem. Dan was early, and his bullish macro thesis on crypto led him to be an early stage investor in many of the companies we all use today, like Kraken, Ledger, eToro, and many more. By having Dan on, I hope to dive into his thoughts on the future of crypto innovation and the stories that are driving the markets today. Dan, thanks so much for coming on.
Hey, Scott, great to be here. Great to be here.
So listen, I recently had Mark Yusko on the show, and he made an amazing point. Said that he was always investing on the side of the criminals by being early. He gave the example of the internet originally being quote unquote for porn, that crypto was originally for drug dealers and criminals. Do you share sort of the same feeling and investment thesis being early?
Well, not really, in a sense. I love Mark. I've known Mark, at least 15 years. He worked very closely with Julian Robertson for a while. When he was at the UNC endowment. And again, my, first real job when I was young was at Tiger, working for Julian in the global macro group. And, I come from a little bit of a different background. I mean, Mark, of course, managing that kind of endowment, very institutional, very focused on asset allocation. And I was in the macro hedge fund business for, about 20 years. And so, running a portfolio, acting as an analyst. And again, a little on my background. I mean, I was at Tiger, and then I worked for Michael Steinhardt, and then eventually Steve Cohen and Stan Druckenmiller. And, that was 25 years there, deep in the trenches, running a portfolio sort of 24/5 currencies, bonds, emerging markets, anything commodities where there was a sort of an opportunity. But it was really, more from this macro analytical framework. And so unlike Mark focuses, as you said, on being super early. I leave the super early for Mark and Andreessen and all those other truly genius guys. I'm looking more to make a bet on the growth in an overall sector. And so for me, launching 10T was about building a portfolio of mid to late stage companies that, names that I thought were de-risked, that I thought were not going away, because when you invest early stage, you have zeros in your portfolio, not something I was very comfortable with. And as you mentioned, and this has been out there publicly, the 10T portfolio is, we have Kraken and eToro, but also Bitfury and Huobi, Ledger, Figure, Deribit, Helium, Figment, Animoca. I mean, we think we have 3 buckets that we invest in: digital asset ecosystem gateways, next generation financial services, and blockchain infrastructure businesses. And the first 2 funds that we launched, we've got 2 or 3 businesses in each sector. And so these are already companies. My minimum threshold for investment is about $500 million in market value. But of those companies I mentioned, 8 of them have values over $1 billion. And so these are companies that have already figured out how to win. They already have established moats around them, making in some cases hundreds of millions of dollars of revenue. I don't think I'm investing next to any gangsters or, nefarious actors. These are all real businesses, hundreds of employees. And basically, I have this view, and I know Mark has the same view, that at some point in the next 5 to 10 years, all things of value will sit somewhere on some blockchain in the digital asset ecosystem. And it's just a wholesale transformation, not just of, store of value. And I think we're starting to see, a huge increase in the number of use cases, as they call them in the space. And the digital asset ecosystem has been expanding, deepening, broadening like nothing I've ever seen. There's nothing I've ever seen grow at the growth rate that we've seen in the past sort of 6 to 18 months.
Most people enter this space as skeptics, though, early, right? So
Yeah.
what was it that finally convinced you that everything of value, every value transfer could happen on a blockchain? Because that's a pretty big jump from, from something nascent and early that is almost non-existent in the first days.
Yeah, I mean, that's a great question. And I think that there is this massive hurdle for people to get into this space. I'm not sure why it's so massive, but it is. I mean, I think it's generally difficult to understand, but for me, look, my light bulb moment really came, I fell down the rabbit hole in early sort of in late 18, early 19. I'd been aware of this space, a gold company that I started in 0809 called GBI, Gold Bullion International. In 2014, integrated with a firm called Bit Reserve, which today is the Uphold wallet. That firm, we were the first to place where you could buy and sell physical gold to buy and sell Bitcoin and Ripple. And so that was my introduction back in 14. And I was a macro guy, so it just seemed like small. It was interesting. I didn't really understand it. I thought it was more sort of like what I call like a plaything for technologists. And it wasn't something I really, you see the word algorithm and all of a sudden, like I jump back from it. Like I figured I wouldn't be able to understand in a deep ways, but then in a deep way. But by 18, 19, it was already a little more established. And as you know, it had that big move into 17, and then it dropped 80, 90%. And just as a macro guy, I'd seen that happen in other markets. And that really is the time that it either goes bankrupt, zero, or it's a buying opportunity. And so I fell down the rabbit hole in that moment and did the deep dive. And what I realized was, and I hadn't before, was that the Satoshi white paper, those 8 pages, was really a solving of a math problem that had been solved for literally hundreds of years, this Byzantine generals problem. And I'd never heard of it. I didn't know anything about the history of cryptography. And again, it's the problem of distributed trust, where two counterparties can trust each other without an intermediary. And again, I'd never thought in those terms, right? It never occurred to me. And so then I realized, I thought, my goodness, this is like an invention akin to the invention of the combustion engine, or a discovery like the discovery of electricity. There's 30 years of real academic work behind this. And, this is transformative. And so that realization, combined with a bunch of other things, but that one put to rest in my mind that, oh, this is a Ponzi scheme. Oh, this is for nefarious actors. Oh, this isn't real. And I said to myself, wow, this is really real. And why was I such an idiot back in 2013, 14, not to really go whole hog into it? But, it is what it is. I didn't, but, I think the other thing that prevents people from believing in this, as you say, in my mind, is that, it's very age dependent. I think It's very hard for someone over 50 or 60 to even think about money, digital money, right? And I think people under 30 and certainly now 20 years old, they have no problem thinking about, value represented digitally in a video game. They've been playing, video games forever. Millennials spend, I think I read somewhere 8 hours, the Gen Z, 8 hours a day online. They live online, their lives are online. So why wouldn't they have their money online too? It just makes so much sense versus a 60-year-old guy who still is like, not even that comfortable on the internet, right? So I think there's a huge divide. I'm sure you see that all the time, right? When you speak
Absolutely. And I sit right in the middle, right? I'm 44 years old. So I think I'm right on the cusp of both of those worlds. And I think what you just described, as you aptly put, with a 6-year-old might also not quite understand the internet. I think that age divide is not specific to money being digital. It's just specific to technology, right? Every older generation struggles with the technology of the younger generation. The same with my parents and the music I listened to and how we did it, right?
Right.
Yeah. So no surprises there. But for you, a lot of people coming from global macro never have that light bulb moment. And so I'm curious, when you talk to your contemporaries, how do you define the asset class? Is it another commodity? Is it a digital gold? Is it peer-to-peer cash? When they ask you
Yeah.
questions, how do you describe that?
Yeah, it's there are actually now some macro guys who have come in, not the older ones so much. You saw last year, Paul Tudor Jones wrote that fantastic 8-page paper about Bitcoin is the fastest horse. So you see my background here, this painting, the fastest horse. Again, it's one of my favorite paintings as well, the Stubbs painting. But anyway, the point is, there are people, I mean, Stan Druckenmiller came out and said he owned Bitcoin. He owned Bitcoin, though, because he saw that people in Silicon Valley and the tech people were making a lot. And he said, you know, they think it's a store of value. So I think it's going to go up because they're making a lot of money. And so I think there are people who are coming to it. But it's very difficult for them to get over that hurdle. And if they do, they understand maybe that Bitcoin is digital gold, you know, maybe because there's a finite amount, and the expansion of the central bank balance sheets means that fiat currency is expanding almost infinitely. So they understand supply is increasing a lot on the one hand in fiat, and it's not in Bitcoin. Okay. But that isn't necessarily give them comfort to take a big allocation. And so even the guys who kind of get that, you know, they're at 5 or 10%. They're not like the 23-year-old who's 90, you know, who's 110% long, and not just Bitcoin, but, you know, Ethereum and Solana and who knows what else, right?
Right.
So I think that what this really is a new asset class. And I think the way that you can think about it is, if you think about something like the mortgage-backed market in 1980 or 82, you know, a nascent market, very early stage. I think it's still early. You know, when I founded this fund, the digital asset ecosystem had a $300 billion value, and that is Bitcoin, Ethereum, all the crypto, and all the equity value in the space was about 300. And I said to myself, I think we can do 30x in 10 years. So that's why I called the fund 10T. Right? 10T is 10 trillion
market cap
in 10 years. And what's happened is that I've been wrong. I'm going to be wrong, because we're at 3T today. And that's just 2 years ago. So we're probably going to do a lot more than, you know, a 3x, 7T more in the next 8 years. And so, you know, if you think about any early stage market, US Treasury bond options in 1979, right? That's how traditional people should be thinking about this. And we have a great chart in our presentation that's about the ABS markets and the astronomical rates of growth, let's say in the 80s and 90s in those markets. And you're looking at like 60% CAGR, you know, for years, right? As it grows. And this has been even greater. Bitcoin has gone up 250% annualized for 11 years. It's the greatest return of any asset in the world. It's like, people who are doubters, I get the first 5 or 6 years, but it's already proven itself. I think that's one of our advantages, being sort of, as like you, I'm a little bit in the middle of the two generations. You know, I think this is already established, right? Like, if I had a 10-year track record of 250% annualized, I don't know, right? Like, that's pretty good. Like, what are you doubting? It can't be zero anymore. To me, there's zero chance that this is zero. And anytime someone says, well, it might go to zero, no, it's
lazy. It's lazy. Yeah. I mean,
lazy.
Lindy effect, Metcalfe's law, network effects, however you wanted to define it. Bitcoin clearly isn't going anywhere. And if it was, like you touched on earlier, if it was going to zero, 2018 was the chance. Right. I mean, we would have probably
absolutely
seen it.
And it wasn't even close. I mean, it wasn't
not even close. Yeah, not even close, because still, like you said, the annualized returns, all that price action happened so quickly that even the floor was higher than it had been a year or two before. So it was not really as significant as people look at it when you kind of view the roller coaster. You could have approached this market from a number of different ways with your background. Obviously, it seems that you took the pick picks and shovels approach. Why is it that you decided to focus on investing in these companies rather than aggressively trading the assets? Or maybe you're doing both, but why was that your approach?
Yeah, no, I'm not. I think this is the one asset, unless you're 24/7, 365, you do not trade this asset. I do not trade it. I allocated what I wanted to allocate initially in Bitcoin and a little in Ethereum. And this is not something that you survive. And I had a lot of experience trading, and this is by far would be the hardest asset to trade, to figure out the squiggles. This is a buy and hold. You buy it, you hold it for 5 to 10 years. And so, what I thought myself was, well, starting a fund that, owns Bitcoin and just sits there, that's not very interesting. I have that in my own entity. And what I saw though was tremendous intellectual activity in the space. The smartest and most entrepreneurial people between the age of 20 and 35 are in this space. They're not going to Wall Street. They're not going to legal firms. They're not doing that. They're in this space. And I thought, okay, well, let's investigate this. Wow, there's a very vibrant ecosystem of companies and a lot of interesting projects, et cetera. But I'm not a technologist. I'm not a venture capitalist. I don't like the risk of a VC portfolio. Not to say that those things don't work. It goes up hundreds. The VC performance in the space has been astronomical, up hundreds and thousands of percent. Solana was at $2 in January. It's now $150. That's wonderful. I'm thrilled for everyone who's been involved there. But it's just not the kind of thing that I do. And to speak to, the investors in 10T are all basically my friends and people from my network of, all those years in the investment world. And I wanted something really simple to explain. And I said, listen, we're only going to, you understand private equity. You all have some private equity in your portfolio. We're going to own private equity in mid to late stage companies that are already established, have already figured out how to win, really straightforward. And if I had started to introduce, it would have been nice to own, a few of these early stage projects and get involved in some of the more nitty gritty. But I just think that it would be difficult to explain. I've got a great team. We've got 5 analysts, people who have been in the ecosystem, deep in the weeds. We can do that analysis, but too hard to explain. And also, I feel like we're a gateway for the legacy people. It's easy for them. I read you the portfolio. Easy for them to say, hey, I know some of those companies. Those guys, they're making hundreds of millions of dollars in revenue. I look at that portfolio and I say, on a 5 to 10 year basis, could that go up 5 to 10 times? Sure. Okay. I don't make 1,000x like some of the other guys. I'm not focused on these early stage things. That's fine, right? Also, some of my investors actually are not allowed to own cryptocurrency. So they've been looking for a way to get exposure to the sector and just haven't found it. The last thing I'd say is this portfolio of companies will have a dramatically less volatile exposure than just directly in Bitcoin or Ethereum, which I think are safe. I think everyone should own them. There's no question in my mind about them. The other ones are more venture-y projects. You just don't know yet. And I don't want to make that judgment. I want to own a company like, Kraken, for instance, that's leveraged to all of the value of those cryptocurrencies, or a company like Ledger that has exposure to all the value in the digital asset ecosystem, because as things become valuable, you need to take them off a platform and have them in cold storage. Sure. Your NFT that was worth $50 a year ago, that's now worth 2 million. You're not walking around with that on your phone if you're smart, right? You have it on your ledger. What's that?
It says some people might be, unfortunately, but yes,
I know, but
if you're smart, yes, correct.
When something gets to a certain value, you need to secure it on your ledger. And so each of these different businesses we own is leveraged to the overall growth in the value, dollar value, or Bitcoin value of the ecosystem. And so it's just a lot easier for me to explain to people from the legacy world. And those are our investors. And I feel like I'm also bringing in a whole new group of people that would not just entertain it, and hopefully increasing network effect and just getting adoption to much greater levels. Because I really think that once adoption, gets past a certain level, as we know, only 2% of the world today have crypto wallets. I think then, it becomes more established. And then also, and this is more specifically speaking about the United States, then the regulators and the legislators, their constituency will be Bitcoin, Ethereum, crypto owners. And then we'll start to get some real proper, regulatory oversight, or whatever you call it. I mean, this sort of is a segue into my next thought, which is that, I really think what's gone on in the US in the last few weeks has been, has just been terrible in my mind. I think the US is potentially in a position to really lose, a step in financial and technological innovation.
Agreed.
Other countries in the world are moving ahead, and very quickly. Now, China is not, they have their own problems. But look, the US doesn't understand 90% of total volume is outside of the US.
Correct.
Like the US can go to zero in volume terms, and it's not going to matter for this ecosystem. This is the most decentralized, I call it the first true global macro investment network, most decentralized network, certainly network of value in the history of the world. And we are going to, clamp down and, not do the work. I think the people here have not done the work, and it's embarrassing, frankly. Don't you agree? I'm not the only one who feels this way.
Do you love sports collectibles or fantasy sports as much as I do? Sorare is blending this together to create an entirely new gaming experience powered by its community. Sorare cards are officially licensed NFTs from over 160 clubs, including Real Madrid, Paris Saint-Germain, and Liverpool, and all built on Ethereum. You truly own your collectibles. They are productive gaming assets that will generate rewards if you're a good fantasy player like me. Join Sorare and connect with your favorite teams, live the game with passion, and earn weekly prizes. You can do all of this at thewolfofallstreets.link/Sorare. I agree 100%. Gensler flat out said in his Senate testimony, listen, there's 6,000 of these coins and we're understaffed, but they're probably all securities. Talk about admitting that you're not willing to do the work. They're just going to put a blanket regulation on all of it because they're not willing to look deeply. I agree with you. And it sounds like, for even what you're saying, we have a bit of a chicken and an egg problem, because once we have adoption, they'll be forced to deal with it. But we're now in a position where they're going to regulate it far before we have adoption, and maybe we get the heavy-handed regulation in advance of that opportunity.
Well, maybe. I hope not. I think there's also an opportunity here for some of the leaders in the sector. You saw what happened with Coinbase, and I think Armstrong is trying to, reach out to people down there. I think the established guys in the crypto space, very eager to work and help explain and teach, more so than in any other industry. It's ridiculous. This is this space embraces outsiders. It's not difficult to penetrate. You try to learn something from the guys in the banking system or legal system or accounting system. It's impossible. People here will reach out. And I am sure that if DC reached out to some of the leaders, you've got Novo Galaxy, you've got some of the, they would have no problem building a group of intelligent people to help the legislators get to where they need to understand that this is really one of the most groundbreaking inventions, certainly in the financial world and in the history of money. Right. And that the United States, which has been the leader in this area, is going to put these blanket generalizations and rules without having done the work. It is embarrassment. We have the smartest, best people in the entire world in this country, most innovative. I say this is like the mortgage-backed industry in 1980. We invented the securities market there, and this is the first time that we're not at the lead, right? 90% of it is outside the US, and we're going to potentially set ourselves back here. So I just hope, look, coming from the traditional world, even the Federal Reserve has a shadow private market committee. I mean, there's a shadow Federal Reserve committee that meets that's composed of, well-known portfolio managers and investment bankers, and they get together and they talk about monetary policy as they see it as practitioners. Okay, none of these regulators are practitioners. None of them are on MetaMask. None of them are, moving around their coin staking or not staking or trading or being involved in any of these things. They don't. And so because of that, they don't see the innovation in the space, and maybe they're protecting, the existing constituencies. But I'll tell you this, look, the United States should have nothing to fear. This is a truly free market. Capital is moving to the digital asset ecosystem because money wants to be free. And right now in the legacy world, it's not free, it's overregulated. The US, I think, overregulated everything after 2008 because there were a few actors who got out over their skis. And it's a shame because we really do have the ability to lead here, right? Yep. But they should be reaching out to people who really know, who have the knowledge. Listen, to some of these guys. I mean, listen, how many Antonopoulos' podcasts did you listen to when you were falling down the rabbit hole? What, 10, 20?
10, 20, yeah.
Yeah, I mean, read the books. Read Safadine Amos's book. Read Jan Pritzker's book, Inventing Bitcoin. Read these great, pieces that have been put out there, right?
But Gensler taught this. I mean, you're absolutely right. But if you're talking, I guarantee that Gensler's read the Bitcoin Standard at least, I would imagine, but he clearly doesn't get it.
But maybe he didn't. Okay. Yeah, and even if he did, he's now a politician, and it's not clear who he represents. In my mind, I don't know that I don't know who or what he represents. I don't know who or what he is. I just know that some people in that group, that organization, wherever, whatever, just sounds to me, okay, like they haven't done the work. You said it yourself, right? They just don't look like they've done the work. Yeah. So, do the work. Or that they intend
to, right?
Yeah, I would hope that they intend to, but you know what? This is the most complex world that I've ever investigated. It's the most complex investment. The space is deepening and broadening. It's fully global. I mean, look, there are more nodes in Germany than there are in the United States.
Right.
Think about that. And there are 3 times the number of people here. So the Americans need to get through their head. This is not this is a global development. And if we want to cut ourselves off from it, the rest of the world is just going to go charging ahead. Okay. And so as the premier country in the world on all sorts of metrics, we need to at least do the work, right? I think, and if after doing all the work, they still think that they don't want it and that they don't, whatever, that's something else. But, engage with the people here who are deep in the weeds, who can explain, and again, I'm sorry if I've gone off on this tangent.
No, please, it's my favorite tangent.
I really feel like, we're potentially at a place where we could do ourselves damage. And again, as you said, it's a chicken and egg. If Metcalfe's law can kick in fast enough and you start to have every congressperson have a constituency that owns Bitcoin or crypto, then we have a game changer. Because then what happens is the people, okay, actually get a say. And this is not going to be from the top, from, a few guys who are academics or whatever it is, who are saying this thing or that thing. It'll be the people, the groundswell, Metcalfe's network effect kicking in, people saying, this is what we see as the future. let's figure out how to incorporate it, right?
Yeah, but that's such an unfortunate indictment of how our system operates, isn't it? The fact that it has to be a political threat, right? The politicians have to fear losing their job to care enough. That's really, I mean, and that's really, and I'm not saying that's what you said. That's really how it is. Yeah.
Democracy is what it is. And, it's that famous Churchill comment, it's the least bad of all political systems. And, I think it is what it is. And it may be unfortunate, but look how much wealth has been created in this country. The standard of living has increased dramatically from 30, 40 years ago. I know everyone complains about everything. That's the thing. When you have free speech, everyone wants to complain about everything. It's just human nature. But when you step back and look what's been built here and how people lived 40, 50 years ago, how they live today, I mean, it's just been tremendous. And, I think anytime that we thwart the capitalist process, anytime that we stop free markets from working, from letting, freedom really kick in and let it work its magic, we get set back, right? I mean, we remember as kids fighting against that communist and socialist threat. I grew up with all of that. And the fact that, we have guys who are thwarting this process. Look, America has worked. Let the magic work, right? Again, this is a tangent, my own political, it's not even political. I don't
think it's political. Right? It's just rational. And the fact, I always make the argument when I go on other people's podcasts that Bitcoin is the last free market. The crypto is the last free market because we're so far beyond, obviously, stocks being a free market. I mean, everything, people love to make the indictment of Bitcoin that it's manipulated because whales can move price, which, by the way, is the definition of a free market in my mind. But manipulation is money printing and Fed policy and buying stocks and providing a floor for bonds when otherwise there wouldn't be one. So as much as it's a dream, we lost the free market in the United States a long time ago.
I think we did, unfortunately. But I would, and I do agree with you about Bitcoin being the only free market out there. This market, okay, and I said this in March of 20 as well, but this market has had 7 corrections of what, 70% or more since inception, and it survived, and people have killed it off, and it's not going anywhere. It is a store of value. It is extremely valuable. What is the valuation today? It's $1 trillion valuation.
Roughly.
To me, that is way too cheap. This gets to the headline. Of course, I said Bitcoin could be worth 300, 400, 500,000. I said that 2 years ago. I said it at the bottom in March of 20 when it sold off dramatically, like 30, 40% in 2 days. So this is the only true free market. It will survive. It is strong. And I think now, it's proven beyond any reasonable doubt, okay? There's no banning it. There's no getting rid of it. There's no government that is going to ban it. China completely shut down mining this year to 0, as we know, and it hasn't had any material effect that I could see. We should be encouraging these businesses here in the United States. We should be incentivizing them. The miners now, as we know, a lot of them have moved to Texas. A lot of rational actors there in Texas. I hope that we could become, the mining powerhouse. I mean, and we're going to do it with renewables. Everyone is still, it's the same old FUD that they throw out at everything. It's going to uses more energy than this, or, a government is going to ban it. Anytime someone asks me those questions, the first thing that I say to myself is they haven't done any work, because we know in the space, there are probably 10 to 20, 50, at least, great pieces of research that have been written debunking those arguments, right?
Right.
I mean,
but they're great headlines. And they're great headlines. And it feels like our politicians and the regulators at this point are much like your crazy uncle on Facebook who reads a headline and just extrapolates all of his knowledge about a certain topic from one headline. Right. I mean, and I'm not a very political person, but you get Elizabeth Warren, who's literally just vomiting headlines, right?
Right.
More the ones you said, more more power than the country of Pakistan or Argentina and only used for criminals. And it's the same recycled thing. And it takes 5 minutes to understand and do the work. Like you said, clearly the theme of this podcast is do the work.
Well, you know what, but you know, Scott, what I would say though a little bit is I sound like I'm blaming them or whatever it is, but you know what? I do have some sympathy because they're older people.
Yeah, they don't get
and
it.
they're not internet native or crypto native, and it's hard. Okay, it's hard for a 60-year-old person. I don't care how smart or successful they are. It's hard to really understand what's going on here. It really is. It's a you know, the number of disciplines that come together here. This is not just finance or economics, you know, sociology, psychology. It's so many different things: cryptography, science, math, computer programming. I mean, most of these people, there was no computer when they were growing up. It's really tough. And so like, I know us in the space, we're like disappointed at them, but they really need our help.
I agree.
You know, they really, you know, again, I've never seen such a welcoming space. You can't tell me that if, you know, some of these people reached out to people in the space, that they would be turned back. They would not be turned back. No. And I mean, it's just incredible. I feel like it's almost an evolution in the way humans, you know, will interact with each other. I mean, you know, there's so much going on here. Look, I think Gen Z, I read recently, spends 8 hours a day online. Now, the people who run this country need to understand that. They're living online, right? All things. They do social things. They buy and sell things. You know, digital value is as normal and as normal a concept to them, you know, as breathing air, right? So we have tremendous, real structural change in our society and culture, and we can't let, we can't let. I just hope that the people who are at the helm in DC spend the time, reach out, talk to people, and really understand this thing so that the US isn't, right?
Well, I mean, if they don't get it now,
I'm sorry if I've gone off on a tangent.
I love it.
Here,
wait, and if they don't understand it now, wait till they get a load of the metaverse in 5 or 10 years.
Forget about 5 or 6 years. It's there now. And, you know, the growth and the value of NFTs is up 100 times from summer of last year. Think about that. 100 times. Like, this exponential rate of growth in the space is what we all, I think, are having a little difficulty dealing with and comprehending. So I know I've been harsh on the regulators and on the leadership, the politicians, but it's honestly, it's not really their fault. You know, even people in the space are having a hard time keeping up with the innovation.
Myself included. Yeah.
Right.
Sure.
I mean,
100%.
it's really been, it's been difficult. So I may not have sounded like the most welcoming guy, but I honestly,
I think it's the opposite.
And our portfolio and the investments that we will be making in the future is leveraged to that innovation and growth globally. And we want to own businesses that are global, right? Because this is a new phenomenon.
Sure. In no way do I think it actually sounds unwelcoming. I would say it's quite the opposite. I think that our industry and your tone and mine is just come talk to us.
Right.
I mean, it's literally the opposite. Coinbase, you have Gary Gensler on one hand saying, hey guys, come into the office, talk to us. We want to discuss this. And then when you have a company like Coinbase that walks into their office, presents something in advance, discusses it, the Lend product, and is threatened immediately with litigation when they're trying to offer a product that's only 4% interest when 10% is the industry standard. So that double standard makes it impossible for a company, I would imagine, to want to run over to Gensler's office hours, as he likes to call them, to discuss this.
Right. And what happens is companies say, you know what? 90% of the businesses outside of the US, hey, you know what? We're not going to do business in the US.
That's right. All the
Now,
exchanges.
that would be a catastrophe if the leading businesses in this space decide that 90% of the businesses outside the US, we're just not going to have a presence there. Long term, that would be very discouraging, and I hope that that won't be the case.
So you talked about the fact, obviously, you had a gold fund previously. You come from global macro.
No, actually, it's not a gold fund. It's a physical gold business. We sell and store physical gold. The vaults are outside of the banking system. It's
Understood.
Yeah.
Do you think that not to put no pun intended, but the gold is losing its luster? Obviously, we're seeing in this environment since really March 2020, we've seen obviously Bitcoin bottomed, but pulled a 17x from there, right? From under 4,000 to 65,000. Gold's been a little bit less exciting. People don't really talk about it as much. Do you think that people are truly viewing Bitcoin as digital gold and that's where that money is going? Or do you think that this is just part of the gold cycle and eventually it has its moments?
Look, maybe some money went to Bitcoin, sure, but I think it is part of the cycle. I think gold is really the only true hedge left within the legacy system. And so, I think institutions actually will start coming to gold. I know I've said this for the last 18 months, and I think it's true to some degree because the bonds are negative real yielding and yield such a small amount. They don't really act as a hedge to the asset side of your portfolio. So traditional portfolios, which have been 70-30 or 60-40, that's equity bonds since 1981. That's been a great exposure. Every time you've had a wobble, I've said this many times, in the equity market or a wobble in the economy, your bonds, the appreciation on your bond portfolio helped offset that. Those bonds are not going to appreciate anymore. They are not going to help you if things slow down. The equity market decides to go sideways or lower for a few years. I don't see that, but if it happens, you don't really have a hedge. And I think gold is that hedge. And so I think if you're within the legacy system, you don't believe in the digital asset ecosystem, you're long a lot of equity, that's your only exposure. So I don't see gold going away. It's been around for 5,000 years. It has a great track record of maintaining its purchasing power. No, it's not going to outperform Bitcoin. Again, look behind me. Bitcoin is the fastest horse. There's no question about that. But I just don't see gold going away. And actually, my gold business had a record year last year and a record 6 months. So I think the debasement going on in global fiat that we see through the massive expansion of global central bank balance sheets, I think the supply of gold is increasing at an infinitesimal amount every year. It's a very simple argument to make. Gold is not increasing in supply. Fiat is increasing massively. Owning gold is going to do well in your overall portfolio.
Yeah, that makes perfect sense. So before we get done, there's just one more thing I wanted to ask you about, which is, what are you personally, I mean, you've obviously invested in all of these companies. I'm curious, not specifically companies, but what are you looking at and what are you most excited? What do you see coming over the next couple of years that you think you'll be putting money into?
Yeah, I mean, to be honest, I sort of follow Stan's old dictum, Stan Druckenmiller, I worked for, who used to say, I like to put all my eggs in one basket and then I watch that basket very carefully. Now, I mean, I'm not saying I'm doing that, but this is my full focus, 100%. We're going to be building another portfolio in this space that is going to be all new businesses, different businesses that I think represent what I call sort of the deepening and broadening of this digital asset ecosystem. So, we're moving beyond now Bitcoin, more than just Bitcoin as a store of value, or Ethereum, as world computer, which was talked about in 15, 16, 17. And right now, the number of use cases in the space, from, stable coins to, dollar value locked in DeFi, to NFTs, the value being captured there, to just the massive explosion in volume, the borrowing and lending. Remember, this is all global, okay? It's 24/7, 365. It's in every country around the world. And the pace and acceleration is just like nothing we've ever seen before. And so I'll give you one example. I'll leave you with this. In our space, in 1 year ago, exactly September of 2020, there were 14 businesses that had a valuation of over $1 billion. Okay. Today, they're about 70. Okay. So our, ecosystem of businesses, our, world that we invest in has completely exploded, much more than I would have ever thought. And there's a very diverse, very exciting, flourishing ecosystem that is growing, again, at this exponential pace. And the portfolio that we're going to construct, that we are constructing and will in the future, will be leveraged to that growth. Because as an investor, I feel like, this is really the only place of sort of true alpha for a macro investor. But there's so much going on, Scott. I feel like I don't really have time to do anything else. I mean, I feel like we're just sucking from a fire hose. We're way behind. We probably have a pipeline. There's a bigger pipeline than we have money. And we've put $700 million to work in the last 5 months in this space. 700 million. And I feel like our pipeline is much bigger than we have capital. So there's nothing really else to do in my mind. It's just, you can diversify in the space. You can have your traditional exposure to equity if you feel like, but I think every investor needs to put in the time, focus here, start with buying Bitcoin, learn Bitcoin, understand it. Everything in this world is, of course, as we know, a derivative of Bitcoin. Is code that's been, hived off. Then try it, make a go at Ethereum, right? Same advice. And then start looking at all the activity, right? It's
approach approach that I tell people. Just buy some Bitcoin, man. Just buy it. Transfer it. Just try.
You don't have to buy a lot. Buy $1.
Buy $100, man.
$100. Like, no one's forcing on you. Oh, okay, it's got the best track record of any asset in the history of the world. Don't worry. Don't worry about that. Don't let that excite you, right? just try it. See what it's like. Learn, read, dip your toe in, and it's going to change your life, right? I mean,
I agree.
It just changes your life, no matter who you are, no matter how rich you are or not. There's no wealth gap here in my mind. You either own Bitcoin or you don't, right? And it doesn't matter whether you own $1 or $100 million.
I absolutely agree. I think that's a great way to conclude. Where can everybody keep up with you after this? Where can they follow you and potentially get in touch with you about the next fund?
Well, there's I'm on Twitter, DTAPCAP, and then I'm on LinkedIn as well. And our website is 10tfund.com. Pretty straightforward. And we're just going to continue and stay focused and try to make sure that drinking from the fire hose doesn't drown us.
Well, it's hard not to be bullish when you hear about all the money that's flowing into the space and where it's flowing in from, regardless of what the price is at any given moment. So I appreciate you sharing that perspective and obviously giving us a bit more perspective on what's actually happening on the regulatory side, and that making it clear that all of us need to ourselves do the work to convince our politicians and get out there and make sure that we see some sensible regulation. So thank you very much.
My pleasure. This was a lot of fun. Thanks, Scott.